Hey everyone, welcome back to Corporate Decoder, the place where we unpack the financial mysteries of the biggest companies. And if you thought the last report was a roller coaster, buckle up because this one is for the Franklin ClearBridge Enhanced Income ETF. And it is a doozy when September 2025 rolled around before we dive into the nitty. Gritty, if you love getting financial insights without all the corporate jargon, hit that subscribe button and ring the bell so you never miss an update. And hey, we've got a fantastic community brewing in our Discord server. Link down below, join us to chat about these filings and more. So what we have here is a certified shareholder report from Franklin ClearBridge Enhanced Income ETF. This is basically a look under the hood at how the fund has been performing over the last 6 months, specifically from the 1st of April 2025 to the 30th of September 2025. Now, who are we talking about? Franklin ClearBridge Enhanced Income ETF, ticker YILDA, is a fund designed to provide income and long-term capital appreciation. It sounds straightforward enough, but let's see what the numbers tell us. Right off the bat, they show us the costs based on a hypothetical $10,000 investment for the Franklin ClearBridge Enhanced Income ETF. The cost was only $25. This is a tiny amount, really just about 0.47% of that $10,000 investment. It is good to see they are keeping costs low for investors. Now, for some critical numbers, as of the 30th of September 2025, total net assets came in at a respectable $117,326,150. That is a good chunk of change managed by the fund. The number of portfolio holdings looks to be 55, which means they are holding a decent number of different investments, not too concentrated port. Folio turnover rate was at 22%. This means they bought and sold about 22% of their holdings in that period, which is not excessively high for an actively managed fund. Let's peek at what is inside that $117 million, the pie chart here, which is a bit visually challenging to describe without seeing it. Shows a breakdown of their investments based on the percentages listed there. Their biggest holdings appear to be in information technology, which makes up a hefty 14.9% of their investments. Another significant chunk is in financials at 14.2%. Healthcare is also a big player at 11.4%, and energy is about 10.7%. They also have investments in industrials, materials, real estate, and consumer staples. Among others, this mix suggests a strategy that is broadly diversified across major economic sectors. Interestingly, this report also covers another fund, ClearBridge Large Cap Growth Select ETF. The ticker is LRGA, and it seems to have a different investment focus given its name. It is described as a large cap growth fund, so while the Enhanced Income ETF is about income and broad growth, this one is likely focused on fast-growing companies. For the ClearBridge Large Cap Growth Select ETF, the cost for a hypothetical $10,000 investment was $26, very similar to the Enhanced Income ETF at 0.47%, again indicating a consistent approach to cost management across these funds. As of the 30th of September 2025, total net assets for the Large Cap Growth Select ETF were a much larger $447,129,762. Wow, that is a big difference from the Enhanced Income ETF. This fund is managing significantly more assets. The number of portfolio holdings is much lower at just 26. This suggests a more concentrated strategy, perhaps focusing on a smaller number of high conviction growth stocks. The portfolio turnover rate is 27%, which is slightly higher than the Enhanced Income ETF, but still not alarmingly high. Looking at the ClearBridge Large Cap Growth Select ETF's investments, information technology is the dominant sector here at a massive 46.1%. This is a huge allocation and tells us this fund is heavily betting on the tech sector. Consumer discretionary comes in second at 18.2%. Financials are at 8.1%, and healthcare is at 4.7%. In information technology makes sense for a growth fund, but it also means this fund's performance will be very tied to how the tech sector does. Now let's dig into the specifics of what the Enhanced Income ETF is actually holding. Remember those percentages we saw well here is the real meat, the schedule of investments for the Franklin ClearBridge. Enhanced Income ETF, we see their top common stock holdings, starting with companies like Walt Disney Company Alphabet Inc., Class of Shares Meta Platforms Inc., Class of Shares Comcast Corp., and T-Mobile US Inc. In the communication services sector, these are big, well-known names and represent a significant part of their communication services exposure. They are also invested in consumer staples like Coca-Cola Company, Diageo PLC, ADR, Nestle SAR, ADR, and Procter & Gamble Company. These are classic defensive stocks that tend to do well even when the economy slows down. In the energy sector, they hold Enbridge Inc., EQT Corp., ExxonMobil Corp., and Williams Companies Inc. This shows a clear bet on the energy market, which can be quite volatile, but also offers pretty good returns. For financials, they've got JP Morgan Chase and company PNC Financial Services Group Inc., Capital One Financial Corp., Apollo Global Management Inc., and Visa Inc. These are all major players in the financial world. Their healthcare holdings include Becton Dickinson and company CVS Health Corp., United Health Group Inc., AstraZeneca plc, Adia Helion plc, Adia Johnson & Johnson and Merck & Company Inc., which is a very solid and diversified set of healthcare companies, a sector often considered a safe haven. In industrials, we see L3 Harris Technologies Inc., Northrop Grumman Corp., RTX Corp., Waste Management Inc., Old Dominion Freightline Inc., and Union Pacific Corp. This sector covers a wide range of businesses from aerospace to waste management. And in information technology, the sector making up almost 15% of their investments they hold T-Connectivity plc, Broadcom Inc., Texas Instruments Inc., Microsoft Corp., Oracle Corp., Apple Inc. These are all massive tech companies and represent a substantial portion of the fund's portfolio. Here is an interesting detail. The Enhanced Income ETF has written options on the S&P 500 index. These are essentially contracts where the fund sells the right to buy the index at a certain price. And they've received premiums for this. This is likely part of that enhanced income strategy aiming to generate extra returns. But it also comes with some risk. Now let's look at the ClearBridge Large Cap Growth Select ETF's holdings. We see a much heavier concentration in information technology, which is a big 46.1% of their investments. This includes companies like Nvidia Corp., Taiwan Semiconductor Manufacturing Company Limited, ADR ASML Holding NV Apple Inc., Microsoft Corp., Oracle Corp., Palo Alto Networks Inc., and ServiceNow Inc. This is a truly tech-heavy fund as expected for a growth strategy. Consumer discretionary is another major segment at 18.2% with holdings in Tesla Inc., Amazon.com Inc., and Airbnb Inc. These are all high-growth consumer-focused companies. Their financials exposure is at 8.1%, including PayPal Holdings Inc. and Visa Inc. This is a bit lighter than the Enhanced Income ETF, which makes sense for a growth-focused fund that might prioritize growth over stability. Comparing the balance sheets is always insightful for the Franklin ClearBridge Enhanced Income ETF. Total assets are around $117.9 million with liabilities around $600,000, giving us net assets of about $117.3 million. This means the fund is in a very healthy financial position. For the ClearBridge Large Cap Growth Select ETF, total assets are much larger at about $447.3 million with liabilities. Very minor at around $180,000, resulting in net assets of $447.1 million. This fund is significantly larger and also in strong financial shape. Now let's talk about how they made money or lost money over the 6-month period for the Franklin ClearBridge Enhanced Income ETF. Total investment income was about $1.25 million, but their expenses, particularly the investment management fee, were around $253,000. This leaves them with a net investment income of about $1 million. The real story though is in the realized and unrealized gains and losses. They had a net realized gain on investments of about $970,000, but a net realized loss on written options of over $1.1 million. This option strategy seems to have cost them a bit. The change in net unrealized appreciation was a positive $8.6 million. So overall, they had a net gain on investments, written options, and in currency transactions of about $8.4 million. This led to a significant increase in net assets from operations of over $9.4 million. For the ClearBridge Large Cap Growth Select ETF, their investment income was about $1.19 million, but their expenses were much higher at almost $1 million. This is because they are managing a much larger asset base, leaving them with a net investment income of only about $212,000. The magic for this fund is in the capital gains. They had a massive net realized gain from investment transactions of over $26 million. Add to that a huge change in net unrealized appreciation of over $48 million. This means the fund experienced incredible growth in its holdings during this period. The total net gain on investments was a whopping $74.2 million. This resulted in an enormous increase in net assets from operations of over $74.4 million for the period. Looking at the changes in net assets for the Franklin ClearBridge Enhanced Income ETF, the operations added over $9.4 million. Distributions to shareholders were about $3.3 million, and share transactions added another $7.8 million. This all led to an increase in net assets of nearly $14 million. so the fund grew by about 10% in this period. The Franklin ClearBridge Enhanced Income ETF saw quite a bit of issuance of new shares. In this period, they sold shares worth millions, indicating investor interest in the fund. For the ClearBridge Large Cap Growth Select ETF, the operations alone added a whopping $74.4 million. Distributions were zero for this period, which is typical for a growth fund that reinvests its earnings share transactions, however resulted in a net decrease of over $8 million. This might seem counterintuitive, but it indicates that more shares were redeemed than issued during this specific period, perhaps due to market conditions or investor sentiment, even though the fund itself grew significantly from its investments themselves. The beginning net assets for the Enhanced Income ETF were about $103 million and ended at over $117 million, a healthy almost 14% increase. The Large Cap Growth Select ETF started at about $380 million and ended at a remarkable $447 million, an increase of over $66 million. This represents substantial growth driven by their investment performance. These financial highlights give us a per share perspective. The Franklin ClearBridge Enhanced Income ETF had a total return of 8.93% for the 6 months ended the 30th of September 2025. This is a solid return. The ratios to average net assets show their gross and net expenses are very low at 0.47% annualized, which is great for investors. The ClearBridge Large Cap Growth Select ETF had an astounding total return of 19.60% for the same 6-month period. Wow, that is a fantastic performance driven by that huge gain in their tech holdings. Their expense ratio is also very low at 0.47%, which is excellent given the performance they delivered. Now, for some of the finer print, the notes to the financial statements explain how they value their assets. They use market quotations when available. And for less liquid assets, they have a robust process involving independent pricing services and a fair value committee. This is all standard practice to ensure accurate reporting. They clearly define their valuation hierarchy. Levels 1, 2, and 3 are used to categorize how assets are valued. Level 1 is for readily quoted prices, level 2 uses observable market data, and level 3 involves more judgment and unobservable inputs. It's good to see they have a structured approach to this. The notes also detail their use of written options, particularly for the Enhanced Income ETF. They explain the risks and how premiums are accounted for. This strategy is intended to boost income. But as we saw, it can also lead to losses if the market moves against them. The document details share transactions, which is how new money comes into the fund and how money is paid out to shareholders. This section explains how shares are created and redeemed by authorized participants and how this generally happens in blocks called creation units. A significant portion discusses the Board of Trustees' approval of the management and sub-advisory agreements. This is a routine but important part of fund governance. It shows the board reviewed the services provided, investment performance fees, and profitability of the managers like Franklin Templeton Fund Advisor and ClearBridge Investments. For the Enhanced Income ETF, the board noted its performance was above the median of its peer group. The fund also recently changed its investment objective and strategy to focus on an enhanced equity income strategy, including an options overlay. This is a notable shift in its approach. For the Large Cap Growth Select ETF, the board noted its performance was below the median of its peer group. They discussed this with management, who explained that the underperformance was partly due to the benchmark's increasing concentration in a few mega-cap stocks and sector allocation differences. They also mentioned changes to reduce the fund's ESG focus and become diversified to allow for a more concentrated approach. They are closely monitoring management's efforts to improve performance. The board's review also covered fees and expenses. They noted that the management fee rate for both funds was below the median of their respective comparable funds. The Enhanced Income ETF saw its unitary management fee rate reduced from 0.59% to 0.47% effective the 1st of March 2024. This is a positive for investors. The report also touches on the profitability of the managers Franklin Templeton and its affiliates. This shows that while the funds are performing well, the profitability for the managers themselves was not considered excessive given the services provided. Now for my take on all of this. The Franklin ClearBridge Enhanced Income ETF seems to be doing exactly what it says on the tin, providing enhanced income and capital appreciation. Its performance was solid and its costs are incredibly low. The shift in its strategy to incorporate an options overlay is a key development to watch though, as that can introduce new risks. The ClearBridge Large Cap Growth Select ETF is a different beast. It delivered absolutely stellar returns over this period thanks to its heavy weighting in tech and the phenomenal performance of companies like Nvidia, but its underperformance relative to its benchmark and peer group, despite these amazing absolute returns, is something to consider. The board's comments about concentration in the benchmark and sector allocation highlight the challenges of a growth strategy in a hot market. The fund is making strategic adjustments to potentially improve its relative performance. Overall, both funds appear to be well managed with a strong focus on keeping costs down for the enhanced income ETF. It is a case of steady as she goes, but with an interesting new income enhancement strategy. For the large cap growth select ETF, it is a story of explosive gains, but with questions around relative performance and strategic focus. What are your thoughts on these funds and their latest reports? Do you own any of these or similar investments? Let me know in the comments below. If you found this breakdown helpful and want more deep dives into corporate filing, smash that like button and subscribe. It really helps us bring you more content like this. And as always, check out the Discord community for more insights and discussions. Thanks for watching Corporate Decoder, and we'll see you in the next one.